Hey, welcome back to Driven Channel, and I'm here very excited. I don't know how to say this, but you are the person that I look up the most to in business.
Wow.
Why? Because we have our biggest baby is our mortgage company that we started in 2013, and we kind of started it like with no plan, like it. And then I went through your book, Integrity, and it's like my life story minus a few things, and you are the like the you're what assures all of us, like you make it believable that mortgage is like the one of the best or the best industry to be part of. So we're all here mortgage people. We're very excited in the mortgage industry, and there's a lot of ups and downs. But with your story, Glenn, on how you got into mortgage, how you started, and coming from your background where you had issues at home and you went through a lot of problems, it's very inspiring for all of us. And you built the biggest lending mortgage lending company, and then you sold it,
Yep.
and now you're back and you sold it for a big amount. I went to I was at your house. You had us for dinner. Beautiful home. I don't know if it's how much it's worth, but it looks like $100 million home. It's huge, beautiful home, and it's very inspiring how much success you've achieved. So going back, Glenn, when you started, can you just talk about a little bit about how you started and how you ended up in the mortgage space?
Sure. Well, first, thank you. I appreciate the compliment. Um, who was it? I think it was Mike Tyson, right? We've all got a plan to get punched in the face.
Right.
And I've never really, I think because of my life and how I was raised, I didn't put a lot of value um, in just thinking things out. You have to do it. You have to be a part of the pain. You have to be a part of the success. You have to be a part of everything to then be able to realize when you put the gas down, when you put the brake on in life, right?
Hmm.
And so I was very fortunate growing up that I didn't have um, a perfect life. I had a lot of things that, you only know what you know. As a kid, I didn't realize how um, bad's not the right word, but how dysfunctional my family was,
Yeah.
and but all of that adversity gives you gave me a lot of tools, right, of how to deal with life. And then when things were bad, you go, it's not that bad. I've had a lot worse, right? And that becomes an advantage to a lot of people who maybe haven't had the big swings in their life. And in the industry that we're in, mortgage banking, you got some big swings.
Hmm.
When it's great, there's nothing better, and when it's bad, there's probably nothing more painful. Um, and so, how do you adapt to that? Again, it goes back to probably my life, of having a child at 14,
Yeah.
failing fourth grade, alcoholic parents, on and on and on. Um, you know, I thought it was the worst thing in the world to fail fourth grade. Now I have friends in both fourth and fifth grade. I thought it was the worst thing to have a child at 14. Now I've got a beautiful daughter. So there's always silver linings. And I think our industry, um, it's the worst interest rates ever. Well, guess what? A lot of people are clearing out, and we're getting back to the professionals again. And we're getting
Right.
back to the ability to make the relationships where maybe we couldn't get in the door before. There's a lot of ways to look at things, and if you choose to look at life half full, you can get a
Yeah.
lot more out of it that way.
So speaking of the mortgage, how it gets very, very bad. There's like very dark times for a few years. Do you think we already went through those few years of dark times, and moving forward after elections and with the rates coming down, you think that we're gonna have another swing of maybe 7 amazing years, or do you feel that and do you feel like we went through the last 2 years of hell?
I will tell you, it feels like the worst is behind us. Um, it's interesting, I've read a lot of these books and I've talked to a bunch of people. Um, one of them was a gentleman that, if you remember, they crashed their plane in the Andes. They made a movie called Alive, and there was the head of the rugby team that had made it. We're going to be out of here by next week. We're going to be out. And when the week went by and passed, he dropped into a very dark place and he ended up dying. And you look at Viktor Frankl and his book, Man's Search for Meaning, when they were in the concentration camps. We're going to get out of here by Christmas. And when Christmas came and went, people lost hope and died. I know we're going to get out of this. I don't want to put a timeline on it because if it comes and goes and you get stuck on that. So I've never looked at that. What I've looked at is what can we deal with and change and manipulate and be a part of. And that is relationships, and that is getting involved in programs and different things that can help our clients. But I'm I can't help whether the rates go up or down. I can't help whether Fannie and Freddie decide to make it harder or easier for us. So the things that we can control, I try to focus my energy in that area.
Yeah.
And again, I'm not sure if it's we're gonna get a refi boom out of this. It's gonna be great. By the way, we thought that a month ago, didn't we?
Right. Yeah.
Life was great. We've gone up another 100 basis points again. These starts and stops happen
Yeah.
a lot more than I would have thought they would. But
Now, what made you come back so strong and so fast? What I mean by that is, like, it took you a long time to build Stearns and to make it the number one lender out there before we even had the two big lenders that are out there right now. But now you're close to like I see you overtaking them very, very soon. Like you're very close, and we
yeah,
were going over the numbers, the fundings last month. I think it was the biggest month ever
right.
for you guys, and you're getting to number one way quicker this time. Do you think it's your track record, your experience that allowed you to do it so much faster, or what? How would you say that?
Well, I think having that experience, I look back at the first go around. I started in '89.
Hmm.
And I knew back then there's no way to catch up to Countrywide and North American and Wells Fargo and Bank of America. Those companies of 30 years ago were the biggest and they were never to be beat. So I thought, right? And that was stuck in my mind. And so I went off and developed a title, escrow, audit, a different group of companies. We became the largest auditor for HUD in the country. We became the largest settlement provider for HUD in the country. And I didn't know what I didn't know. But as we were growing those businesses out in the 90s, basically into the early 2000s, the world changed, right? Policy changes, a lot of things change. And next thing you know, those companies were struggling or decided mortgage banking wasn't their primary driver anymore. You think about banks,
Hmm.
Basel III, we'll talk about the, holding capital for servicing, right? And that changed. So the big banks said, we think we're going to, not put as much into servicing. Well, to do that, where's all the business going to go? It's going to go to the non-banks. And that was something no one could have foreseen. So, different things happen over time that, as they say, every dog has his day,
Yeah.
right? And so I was lucky. I'm focused over here, but I got this mortgage business as I grew my title escrow audit and all the other appraisal and stuff. And we were just maturing in that mortgage space. And then when that changed for me in the title and escrow space, um, what happened was HUD, a new secretary came in. I was working directly with the secretaries, and they came in and said, we are going to go to all small business contractors, no more large contractors.
Yeah.
Well, that cut me out. I'd been the largest in that space for years. And so over the next couple of years, we were phased out because we were the largest. And then our energy went over to the mortgage banking company. And luckily, luckily is probably a bad word, but we all had a shakeup in '07
Hmm.
and everybody was distracted. They were big and they had a lot of issues. We were small And now we'd had, you know, whatever that is, 15, 17, 18 years of growth. So we were able to kind of come in and capitalize, which put us to number one. And so when I look at the new number one and number two,
Hmm.
um, nobody stays forever, right? Things
Right.
change, and the you look at UWM. Matt's done a wonderful job at focusing on the broker. I felt we did that before Matt. He
Yeah.
was he was always number two. We were always number one. And when we had sold, um, the group that bought us kind of went off a different way, and they ended up being able to do a really good job in
Yeah.
that sliding into number one space. And I think that when I look at that business, everybody again, he's a little distracted. He's got um, his energy in other things that he likes, and more
Yeah.
power to him.
Like
We
basketball team.
like basketball team, and I went with Matt. I sat at a game with him, and I was really happy for the guy because we all have goals.
Yeah.
He grew something really big. He did a wonderful thing for the industry. And he was able to reach a dream. Great, great for him.
Yeah.
But that also then goes, okay, as I told him, it's my turn again. I'm coming back up after
Yeah.
you, and we laughed, and it's a good thing,
But there's a huge difference though. The way I see it, like Matt is not a founder. You are a founder. So I feel when you're a founder and you start the business from zero, like that's very powerful. And it was Matt's dad that started the company, and then he kind of took over. I don't think another thing is also your experience that you have besides being the founder, then the experience like that makes you very dangerous. Like I know uh, they're gonna be second and third place
yeah.
because you have you know how to do it.
I like the competition. I respect the
You're very competitive
competition.
too.
Yes, but I also respect them, and we come from a mind of abundance, right? Where there's enough to go around for everybody.
Hmm.
So I enjoy talking with these other owners and hearing what's working for them. I tell them what's working for us, and we go out there and do the best we can. Then it comes down to relationships. It comes down to why you're doing it. Again, in his case, um, maybe he's rang his bell in the mortgage space. Will he still want to do it? Time will tell, you know. But I realized after I'd gotten sick, I had a little cancer, and that's what kind of got me to sell. That I loved what I did. I love this space. I love the mortgage banking world, and I don't have any intention to sell or to go public. I mean, I like what we're doing. And so that's kind of dangerous to your point because I'm in my happy space.
Yeah,
I
yeah,
don't have another goal other than I'd like to see if we could get to number one again.
yeah.
You
Why
know,
why wouldn't you go public?
I don't like having, um, I like all my focus being on how to make my customer happy. Going public or having private equity, you've got another customer.
Hmm.
You've got investors, and you have to spend a lot of your energy on keeping them happy. And, I'd rather just focus, and never say never, by the way, but I'd rather just spend my energy trying to make our customer, which is not our investor, happy.
Hmm.
So,
So when you sold the Stearns, it was a fat check, right? You got a fat check. You were the only owner when you sold it, or you have other
I
people?
had 90%,
90%.
right?
And the other 10%, like how important is it to give equity to people in the mortgage company, and why or where how was that 10% invested?
Yeah, it was to other. I had a president
Uh-huh.
that she was very deeply involved in, and it was very important. And I think it is important to reward people that also um, give, you know, their heart and soul,
Hmm.
right? Um, I learned a lot when I watched what happened in our case after, and I don't agree with some of it. What I mean by that is people that want to give their heart and soul and want to see something grow. You should reward them. When you're just throwing out, um, when you're
I'm Albert Preciado. If you like what you're watching and you want to learn from an entrepreneur that built 8 companies and makes over $30 million a year, text me at 213-277-6208 and let's make it happen.
throwing out shares just to do, I think people lose the importance of that. They don't value it. And when that happens, you've lost that common thought process of let's move the ball ahead. It then becomes more about just money.
Mm.
And that's why we've always thought there's other currencies in this industry than money. There's happiness. There's people you want to have come into work and feel the pride of what they're doing. There's people that, you know, work with you and you want them to really feel like this is something that they help build and they have a voice and that you're able to speak your mind and you get to, I think, different company personalities, if you want to call it that, where maybe you're different cultures to
Mhm.
where if you speak up, it's a reflection of the team and don't ever speak up like that again. We're not like that. The more you can add, the more opinions you have, the more you can get closer to the street so you know what's really going on. And we don't have an ego in this thing. We're all building it together. So I think when you can reward people the right way, where you get the right reaction you want, then you should go for it. So I've learned a little of both
Yeah,
on
yeah,
the equity side, I
yeah.
guess.
The kind lending today, are you planning on giving some equity to people that earn it, or some people have it already, or not yet?
Yeah, I haven't yet, but again, it'll be very intentional when it happens. There'll be times when we'll um, we'll find out um, how we reward people,
Yeah,
and make sure it's felt the right way.
yeah. And then I see here everybody is like has very good energy.
Right.
Everybody, it looks like everybody is happy and kind. Is that how it is every day? Like
Yeah,
everybody's happy and kind?
it is. I mean, again, I've watched people, it's 5 o'clock, time to clock out. I gotta go. And what your only lever you have is money. I'll pay you more if you'll
Hmm.
do more. Okay, maybe I'll do a loan when I go home.
Hmm.
Maybe I want, well, if you're happy, you want to help the client. You want to help your account executive. You want to help, and you do things because of the pride you have. And that is an invisible um, kind of that lightning in a bottle that when you have everybody feeling it. And so we intentionally spend a lot of time um, doing our best we can to have people feel comfortable in their own skin and what they do in this
Yeah.
company. You know,
So I want to get to the start of Stearns lending, like how it all started. But before we go there, people here, how do you how is your overall week look like Monday through Friday? Do you spend a lot of time with your salespeople, like with your reps, your account executives, and also with your employees? Is it different, or do you focus more on sales, or do you also are you also talking to like your front desk and other employees that are part of the?
right? Well, so
Because you seem very approachable.
I'm in 5 days a week. I Again, this is what I love. I've got other companies. I've got a bank across the street right there, Infinity Bank, if you know
Mm,
that. I've got um, a pet pharmaceutical company. Got a lot of other businesses.
mm,
I'm in here 5 days a week. This is what I do. I like this business, and I work at this business. And so I spend a lot with sales. I like sales the best,
yeah,
so
yeah.
I gravitate more towards sales. Um, and then I've had people that have been with us for over 20 years that really have operations down. We're very, very prideful of what we've been able to do with that. And I let them do their thing. And then I'm in more of the strategy side of the house and what are we going to do to scale? What happens if we get a refi boom? How can we take on more volume quick? How do we not have to do the yo yo? hiring and firing and
Mm-hmm.
those kind of things. And so I'm in mostly strategy. I'm not in the um, operation day to day. Like if you came to me with a very important loan that it has to go down, I'm not going to make the decision for you. I've never in my life made a decision. You could be my mother, I wouldn't make the decision, right? People that know how to underwrite, that's their job. And I've spent a lot of time with the head of all of our operations, the head of every division, letting them know I will back their decision. And then now they're comfortable enough to know when I say, look, this will be very important to get this done.
Mm-hmm.
I really would like to try your best to get it done. And then I will absolutely honor what they say. You will get by this loan will is not within the guidelines. You will not be able to sell it. Okay, then we won't do it, right?
Yeah.
But if it's in the gray, you want to make that choice, Glenn, it's in the gray. Okay, I'll make the choice, right? But they give me it all out.
Yeah. So you hire professionals and you trust them. You let them do their job.
100%. And I think where what you'll find, what I found the first go around, is we were not well known. You're new, right? In any business, you're new, you're new.
Mm-hmm.
And so you learn through trial and error. You've got your customers know you're not one of the big guys, so they probably give you the loans that maybe are harder to do, and you've got to learn through a lot of pain, a lot of buybacks, a lot of loans that you don't get the cream of the crop. And as we went through that in again the late 80s, all the 90s, the early 2000s, and then we started to hit our stride after the big financial crisis and into the 2010, 2012, 14. At that time, we were number one, right? We really knew what we were doing. Everybody knew us. Now you come back with kind lending. And what makes it easy is we know all the right people. We know the best underwriters. We know the best closers. We know the best account executives. And so we can attract that group again. And then the clients, they all know that we all know what we're doing. So it was able to really scale fast because, and we're not getting the bottom of the barrel loans, right? Because people know and trust us. That's a big important part that you can't build that overnight.
And right now you're a wholesale lender. You don't do retail, right?
We do a little,
A little
yeah,
retail.
yeah.
Do you is that the approach to get bigger, to do more business, to do
We'll
both?
do we'll do both. I don't know that we'll do um,
Because Rocket is both, and then UWM is only wholesale.
sorta, right?
So like I kind of feel like UWM is gonna start doing both.
Well, they already are, right? I mean, they've got all their half their brokers give them 100% of their business. So,
Uh-huh.
are they really,
Yeah,
wholesale or
yeah,
are they retail?
yeah.
But yeah, no, my thing is all of our clients, everybody knows your loan is your loan.
Mm-hmm.
When it goes into servicing, it is your loan. Nobody ever has ever touched that in our last company, and they would never do it again in this company. And but if we had probably one of the better retail companies back in the day, and a lot of those people say, "Hey, we want to come back to that. We like that energy and that family." So we've brought a lot of those people back into the fold again, and we'll, you know, get involved in that. But it hasn't been something that, like, I like it because I did it. I grew up retail, right? I
Mm-hmm.
grew up doing that, but we've really made our name with wholesale.
So when you started so growing up as a kid, your dad is he drinks a lot, right? And you go through that as a kid. How do you feel that affected your life when you're going through all that at home? And do you feel like that led to you also drinking?
Oh yeah, definitely. So
Because like we like to drink too. we like to party hard, and they're probably gonna want to go get some tequila later on. But we have our culture is like we win. We're number one, and then we go celebrate hard. So we're going through that whole thing right now. We're not. I wouldn't say we're alcoholics, maybe a little bit, but we like to have a
You know,
good time.
you're young, and it's fun to go out and you work hard and then you celebrate. You
Yeah.
know, nothing wrong with that.
But how
Uh,
was it? How was your dad? How did that affect you, if in any way? And then how do you become an alcoholic yourself and go through all those
so
things?
my dad, you know, he was a hard drinker. He worked the graveyard shift at a printing company. And, you know, when I look back, little things that would happen, like being so drunk and I falling asleep and I'm driving the truck. He's asleep, you know, and I'm
How
literally,
old are you when that's going
I'm
on? Because
like
I
8, you know, and I wreck the truck and he gets thrown in jail. And, you know, those things, you look back on that and those kind of things, right? Then my mom leaves him when I'm about 18, and you see a man, a broken man, right? And I go off to college. I fall right into the same footsteps. By the way, I fell into those footsteps at 14 because I had a child, so I was already kind of lost, and I had an intervention in 11th grade with the teachers and my mom for being out of control, and so I was there, lost.
But what kind of crazy things were you doing back then?
Well, I mean, I don't know what you call crazy, but you know, I remember in college I went to a jail with my class, and the guy's going, "I'm in here because I was in a blackout. If any of you guys ever, do you even know what a blackout is?" I'm thinking, I've been to probably 100 blackouts. You know, I would every night drink until I don't even
Mm,
remember where I was.
mm.
Wake up in a laundry room or, you know, under a
You were doing
table.
that. You were doing that every day,
No, probably
oh,
5 days a week. But yeah,
pretty
I mean,
much.
pretty much.
But how old are you? Right,
I'm
right there.
right then I'm 18,
Mm.
19, 20, 21. You know, and I graduated college, and I had 2 girls in the same 3 days sit down with me and say, "I'm really afraid you're gonna kill yourself. Please stop." You know? I'm like, "What? I'm fine." And I'm falling asleep at the traffic lights, you know, every day. All right, I'm just gonna, you know, I'm gonna go home and go to bed. And I'd go home and my buddies would say, "Hey man, it's a happy hour. Come on. Just go for one." No, just come for one. 1 in the morning, you're out, you know, again doing the same thing. And I did that over and over and over again. Again, I graduated college. I was in a bar, and it's 1:30 in the morning, and a friend either fell or got slapped by a girl or a beer thrown on him. I don't remember that, but I remember laughing hysterically at whatever he did or whatever happened to him. And in the middle of my laughter, and as I say in the book, I think even in the middle of my deepest fog, I had my clearest thought. I don't want to do this anymore. Like, it's boring. Every night in a cave drinking, you know, just with the same friends telling the same dumb stories.
Mm.
I want to do something different. And so, you know, the next day I went with my buddy and I said, "Hey, why don't we head out to California?" We were in Maryland. And he goes, "All right, when?" I go, "How about tomorrow?" Like, tomorrow? Like, yeah, let's go. And we just went. You know, I knew I wasn't coming back. You know, I knew I needed to change my lifestyle. And so I focused my energy in mortgage banking, really. You know, that's what kind of took me out of
And
the,
this is when you're like 20 years old,
that was when I was 23. Yeah. And yeah, I think I was 23 when I started the
and you only had
company,
one
24.
child.
Yep, at that point.
And did your child move with you, or
She
yeah?
moved with me maybe 5 years later.
Oh,
Yeah. And then she lived with me and she's still out here now. Yeah.
yeah, yeah.
But yeah, no, I was pretty lost. And then I came out of here and it wasn't like it was over. We were still partying, having fun,
Yeah.
but it was a lot more, you know, focus on work. as you say, right? You're working hard
And you
now,
party hard.
and then you partied hard,
Yeah.
and then I got to the point where, you know, the partying hard was
Taking a toll on you.
yeah, you know,
Yeah.
I got it. That didn't
But
shake
you're
off in a
you're
few
making
hours.
money and you're partying hard, but you're drinking a lot, but you're still making a lot of money.
Yeah.
You're doing good. You're like winning in all areas, having fun. And I know you said your weaknesses. Your two weaknesses are
I'm Albert Preciado. If you like what you're watching and you want to learn from an entrepreneur that built 8 companies and makes over $30 million a year, text me at 213-277-6208 and let's make it happen.
uh, alcohol and women and
Yeah,
sex. You said
probably. I mean,
sex.
I had a kid when I was 14.
Yeah.
Then at 27, I ended up getting a girl pregnant, and you know, I got married to
Yeah.
her. We had 3
Yeah.
kids together, and we ended up divorcing. And then she became the godmother to my little girls with Mindy and myself. So that turned out pretty good. But yeah, no, I'd always probably got myself in a little trouble, you know.
Yeah.
But
You
in a
have
good
how
way.
many kids?
6.
6. You beat me by 2. I have 4. No, actually 3. I have
Now you're
3.
still
We have
young.
3. Yeah. So when you start as a loan, you start as a loan officer. So you start as a loan officer. You have your business card, and does somebody hand you a blueprint on how to get a lot of loans, or how do you start, and like how much do you make a lot of money the first year? At what point do you decide I'm going to start my own business?
So I was given my business cards,
Hmm.
and
You got a bunch of leads, and they made it easy for you, or
no, they said go out and go find 15 or 20 real estate offices and call on them every day. I'm like, okay, and what else? And they're like, call on them. I didn't know what to do. And I just went every day and I just given them my card, trying to get in the door, you know? And I did that. I remember the first guy that called me back, he was telling me, look, I've got this borrower and this and that. And I wrote it all down and I immediately called this guy. I'm like, what do I do? You know, I froze. I didn't know what to even do. You got to qualify. I don't even remember how to do that, you know? And so that was the first one. Now, I was very lucky because I was in a broker shop that the owner of the broker shop's son, who was 21, worked there. And then the owner of the investor, the mortgage bank that took all the loans to, her son worked there. So he was 22, the other guy was 21, and I was 23. Those 2 guys were doing between 20 and 30 loans a month. And I mean, they'd been in their blood their whole life, right? So I started hitting the field every day. And that's all I did is go on the field, go on the field, go on the field. And it wasn't working that well. And at the time, there was builders were booming. And so they would have lotteries. If you had one, you know, maybe phase of 15 homes that would be released, there'd be 100 people to buy them. So they do a lottery. If you pick the number, you got to do it. Well, I just go there every week and I'd pre-qualify these 100 people, and I'd be getting kicked out. I'd be getting the police called on me. I'm like, it's a free world. Like, why can't you're on private property, you know? And they would be pissed. And I never stopped. I just kept finding a way in. I'd sit back then. HUD would sell homes in the HUD building. I'd sit on the couch until the head of HUD in Santa Ana kicked me out. And I'd say, I'm a taxpayer. Why can't I sit here? So I was a little more aggressive than most people. But that's because,
you're very persistent.
the guy 21, the guy 22 is doing 25 loans. And I'm doing 10 a month. I'm feeling like a loser. If I was around people doing 3, I'd feel like I'm doing pretty well. You know what I mean?
Yeah.
So I was lucky to be around people that were doing really well. And so after 10 months, those 2 guys went and started their own company. And I said, well, then I'm going to start my own company. So it was only 10 months, and we went out and started our own broker shop.
After 10 months as a loan officer.
Yeah.
Yeah.
And I had no idea what I was doing. None.
What's the most loans you ever closed, like in a month, that you remember?
I don't even remember.
But and it was just you, or you had an assistant or a team?
No, it's just me.
Just you?
And then I started the company in 10 months.
Uh-huh.
And then you know, then the whole world changed. I was doing loans. Then I had a team
Yeah.
and a lot of other loan
Yeah.
officers.
So when you started your company, like how do you decide what name am I gonna call it? How do you decide, like how did you get the money? How was the start?
So we go back to that plan and how much you plan versus how much you wing, right? Um, I was at a builder's, um, one of those builders. I literally, a guy got out of his truck, squealed the wheels, and as he skidded, stopped, started yelling at me in front of the 100 people waiting for uh, the um, the lottery of what they won. And he starts yelling, "Get out!" And he started pushing me. And as a redneck Marylander,
Yeah.
I don't take that very well, right? I was like, this man is upset because I have better rates than they do. And then he kept pushing me, and I was handing people my card as I was being pushed out. And this one guy ended up calling me, and he says, I like your style. And he goes, I want you to do my loan. And he ended up, um, it was for his daughter that blew up, and he says, do you want to buy the house? I ended up calling a realtor friend of mine. He says, I don't want to buy the house, but why don't we start a mortgage company together? And I was right when the other two were doing it.
Hmm.
So there's some luck in there too, you know what I mean? So I ended up jumping over with this guy, starting the mortgage company. He was a real estate agent. He did not know anything about lending.
Right.
So we get going, we start training these loan officers. And I was lucky enough to get the old office manager from my old company to come in, and she saved my life because she knew how to get us approved. She knew how to start to get us set up with investors. And so it wasn't well thought out,
Yeah. Yeah.
It wasn't this perfect plan on paper. It was, I've always been better at not giving up at anything, It's just like, okay, this isn't
Not
working.
quitting.
Not quitting.
Because that's one of you say that a lot, that you could be a lot of things, but you're not a quitter.
No. I mean, it's easy to listen to why that over there is better than this
Yeah.
over
Yeah.
here. Because everything I've learned now through a lot of this repetition is anything we think is easy, we're going to learn why a lot of other people aren't doing it,
Hmm.
Because usually there's so much that you just don't know, you know?
Yeah.
And when you get into it, you go, okay, now I'm getting my lesson.
Yeah.
And you got to go through the pain.
So like if there's a loan officer watching this, and versus when you started, and then even when I started in '05, there wasn't social media.
Right.
There was not there was no personal brand and all that stuff. Do you feel like if you're a loan officer right now, like if you were a loan officer right now, let's say you're 23 years old right now, you're a loan officer, you're getting started, you don't think social media and personal brand is huge and could allow you to get 10 times more business, and you don't think
Right.
it's easier now?
Um, yes and no, right? It is the tools today are a lot easier in terms of being able to reach millions of people. We never had that
Yeah.
opportunity. Um, it was easier that I could get in front of you got to get in front of somebody. Like you don't. You can go and we can do stuff over the phone and we can do these mobile apps and you can do all that. But there's nothing like being eyeball to eyeball with
One on one,
people.
yeah. Uh-huh.
And so I had that opportunity. And a lot of times what would happen, I would tell people all the time, I said, look, you know, go out to the builder and go and sit in the model home. Go to HUD and sit on the couch. Go to the news station and pitch them a product. I used to sit there and go, there's $100 down payment loan with HUD. And I just closed a borrower on it. And then the news go, we'd love to do a story on that. And then I would get hundreds of people calling, how can I get one of those? And the problem I found with most people, I would tell them what I was doing. Nobody would do that. people are afraid to fail. They're afraid. I'd say, why don't you sit right where the people are?
Yeah.
The people that want a loan, and they don't. I think they get nervous about that's too. What if I'm turned down? So what? You know, and you got to be able to go. Why not go the easiest route you can to make
Yeah.
the sale?
So you're amazing and great in sales and relationships. Now, it's not that easy though to get in front of like a Glenn Stearns. I'm sure a lot of people reach out to you. You probably get thousands of DMs and messages and calls. People want to meet with you one on one or things like that. So how do you become great at getting in front of the right people? Because you did it with HUD, like your whole story, how you grew your accounts and all that stuff. How do you get in front of powerful people face to face?
So that's a great question because when I came out to California, I knew no one,
Mhm.
and I thought I want to get to meet the people that are successful. And so I literally looked in the back of the magazines, in the philanthropic section,
Mhm.
or people had the names on their buildings. And I would go to them and say, hey, I'd love to go to lunch with you. What do you want? I just want to hear your story, right? And there's so many people that were older that nobody ever asked them to sit at lunch. And I would sit with these people, and then I'd end up becoming friends with them and going to amazing places with these people. There were two of them, George Argyros and Robert Day, both multi-billionaires, but one of them owned Seattle Mariners. The other one owned the Trust Company of the West, TCW, and he owned, anyway, everything you can think of. When times were really bad, 2007,
Mhm.
they came to me and they said, Glenn, we want to buy half your company. And I was almost bankrupt. I'm almost done. And I said, wow. I said, to work alongside of the two of you would be a dream come true.
Yeah.
I want to do that. But I would tell you this, I can't do it. What do you mean? They said, son, you don't know. Give us a number. You don't know what we'd pay. And I say, there's not enough money in the world worth this friendship, this relationship. I want to, and I'm desperate, and never do anything out of desperation, right? And I said, as much as I want to, I feel that the mentorship you give me in our relationship is more valuable than any money in the world. And the minute you mix them, they become a bank or they become an investor. You got a different relationship.
Right.
And what was wonderful about that is that then we went on to become number one, and they'd say we should have made you sell. They didn't need the money. They
Mhm.
didn't care. They wanted to give me a lifeline,
Mhm.
and I respected that, and they respected me even more for not going there. And so what we find, I think, sometimes is that you gotta understand where people lie as far as um, whether they're your friend, your mentor, or your investor,
Yeah. Yeah.
and don't blur the lines.
Did you ever raise capital for your first business?
No,
No. So it was all your own effort,
right.
your own money. Now, when all this, all this like the smartness, like the quality questions, the your knowledge, where do you get that from? Because you're like me and Sil, we're driving here, right? And we're just talking about like, man, Glenn is a genius. He's so smart, and we're listening to the audiobook again just to get some just to refresh our memory. And you say something every 5 minutes. She's like, "Wow, he's so smart. Wow, he's so
Yeah,
smart.
well,
He's a genius." So like, is there something that you study or you studied a lot? Did you read a lot of books, mentors? How did you become smart? Because another thing is, a lot of people want to win. A lot of people want to be a lot of people want to get in front of the right people, but then they don't know what to say. Like, how did
right.
you know what to do and what to say?
So I got a 2.1 grade point. Okay, 2.1 in college.
Yeah.
I now have 3 doctorates
Mm,
because they gave them to me um, as an honorary doctorate.
mm,
I'm
yeah.
a little sarcastic, and
Yeah.
my
Yeah.
point of that is, I am not that smart.
Yeah.
And what I am, I'll tell you, I'm maybe higher in EQ than IQ, right? In reading people and understanding people. But as far as being a smart, like brainiac, that didn't hit this side of the family. But what did was being authentic with people, being real. If you read the book, I know you did. I lead with my flaws. I don't lead with all this great crap that's all around. And look at how great I am. I'm lead with look at all the mistakes I've made.
Mm-hmm.
So what I think is the most important thing is that when you are building a relationship, you've got to build it on trust. And the only way you give trust is you say, I'm not perfect. Let me show you some things about me. And then the other person goes, wow,
Yeah.
if he went through that, you know what? I've done more of that too. And then you build something because you're being vulnerable. And when you're vulnerable, people will say that you're real. And that's so important to be real.
Yeah.
When people have left our company, they say, Glenn, I don't understand. You still treat me the same way as when I'm not working for you as when I am. Why? I said, because I like you. What do you mean? Like the fact that you worked here doesn't make me want to like you or not like you any more or less. You have to be authentic
Yeah.
and real. And I think when you get comfortable in your own skin, then people see the real you and it draws people in.
Yeah.
And then you want to work with people you like. I always want to work with the people that, I have something in common
Yeah.
with, you know.
Now, one quick thing before we wrap up. On The Office, I know that you've always gotten like oversized offices, and you've always like invested or took risks to grow. And I remember you got a huge office, and then the shutdown happens, and you're like, oh, I shouldn't have gotten this big office or this. Have you always thought big like that? Are you always a big thinker, and you just want to go big or all the way? And
No, it's been opposite mostly. Is we have learned that a lot of it's better to feel tight and comfortable.
hmm
When you feel that way, you can hear and feel the energy of the room. When you end up going, I'm going to go to this big grand place, all the energy is sucked out. And then people are like, they walking in, but they don't feel the same. And what's in your head is more important than how big your office is. And so I don't, if I've, I've had that happen. I've gone to a great big office. When we started this, we had 5 floors on this building. We had, our name on top of the other one across the street, and we had
I
our
remember
name
that.
down on that one,
Yeah.
right? And so we started with 1 floor, and I thought that's a good start. Well, the same day, Gavin Newsom said no non-essential workers for COVID.
Mhm.
So we had like 3 of us in this big place,
Wow.
right? And you're going, okay, maybe I did overdo it,
Yeah.
right? But no, I've learned the hard way that it's better to be tight. I heard the best days of my life were when we were making loan apps on top of the copier or the front desk. There were so many people, and you're frustrated because there's 4 people in that one office.
Yeah.
But really, you liked it more.
Yeah.
You got to want to beat the other guy and all that. But then when you got your own space, if you ever read Who Moved My Cheese,
Yeah. Yeah.
you hang your shoes up, all of a sudden you're feeling big and mighty, and then you're not making the kind of money you were. You're not driven like you were. And so, a lot of times it's much better to, be wanting to grow, but
Yeah.
there's going to be a cycle. And the minute you end up getting a big space and you got it all in, you move in, the cycle changes, and you're
Yeah.
sitting twiddling your thumbs.
That's awesome. So like there definitely has to be a part two. I want to ask you this last thing to close out. What can we do for you, Glenn? You have a good heart. You I can see it. Like you want to help. You're passionate about the mortgage industry. Like kind lending. What can we all do? There's a lot of mortgage brokers watching this, and they want to sign up for kind lending. They want to work with you. What is your vision for kind lending, and how can people help be part of this?
So, I have a very unique perspective, right? I got in and have gone through a career. And then when I got out, is right when private equity and right when people became public and right when big Wall Street
Mhm.
influence happened. And when that did, all of a sudden, everybody was being paid differently, right? I'll give you a $50,000, $100,000 signing bonus. Come over to me. I'll do this. I'll do that. But now I own you for 2 years. You work here. If you don't, you got to pay me back. And what started to happen was our industry became less kind, right?
Yeah.
I'm going to sue you if you leave me. And these things started happening. And as we say here, if you leave us, it should be shame on us, not shame on you. If you leave, it should be because what are we not doing to keep you here, right? And so, what I think we got to get back to, and there was someone that had called me and said, "Hey, they're bringing in their own chief kindness officer. Like, aren't you upset about it?" I'm like, that's exactly what I want. I hope everybody copies us. Again, it's a mind of abundance, right? We need to go back to where we honor each other. We're in the same business. It's a very small industry, no matter how you look at it. And so we need to have that respect for each other, help each other. You know, if you got a loan and you can't do it, maybe this guy can do it, and vice versa. And it doesn't matter about what flag you're wearing at the time, right? It matters that we're in an industry helping other people. We, I love the fact we don't have to have a Harvard degree. We don't have to have any degree.
Mm-hmm.
We have to be good people, hardworking people that knows how to help a client. And if we all think like that, if we all get to that space where we understand that we're proud to be in an industry where we are professionals, we are advisors, we're not loan hacks. We don't just sit and take out an application and get paid for it. People out there got to look at everything that we do and realize we add value to this transaction. And when you've got that down, then you understand this profession is an amazing profession that we're in. And so we all have to remember that, right? Stay in that mode of being helpful and being in a profession that we're very proud of.
Yeah. And never quit on your dreams.
Never quit on your dreams.
Yeah. Well, Glenn, it was an honor.
Man,
thank you.
Love
Appreciate
it.
you. And then where can people follow you?
Let's see. They can follow me on Twitter, Glenn Stearns. You can follow me on Instagram, Glenn Stearns. I think they're all Glenn Stearns.
Yeah.
GLENNSTEARNSN, kindly.
And then you have a Vive event. I'll put it also below. I don't know if you want to say something about the Vive event before we wrap up.
Nope. We've got an event coming out in where are we going? We're going to go to Richard Branson's place again next year. We're going to be doing an event in March at our home just for top loan officers. So we've got a few things come out. Yeah.
Awesome. Well, thank you, Glenn. It's been an honor.